Welcome back. We are going to do a quick Bitcoin update for this Monday afternoon in August the 23rd of 2021. What is going on with Bitcoin? It's been an exciting weekend. Bitcoin did pop 50,000 for the first time in a while, and lots of news. It was on the front page of CNBC earlier today that Bitcoin was at 50,000, talking about that major level. And now they're talking about three things you need to know as Bitcoin crosses that $50,000 level. Number one, be on the lookout for a bubble and understand what a bubble is and who gets involved when things hit highs and when you get bubbles going on. Number two, understand FOMO and how that can backfire on you as you get back to those higher levels. And number three, it's a nascent asset. It's new, whole lot of questions about it for the general public. So that's CNBC. That's not me, that's CNBC. Earlier today, it was on the front of the homepage of CNBC that Bitcoin had crossed $50,000. If you look into CoinDesk, obviously Cardano has been in the news because of the spike in Cardano lately. Of course, a lot of eyeballs on the Alonzo hard fork and whether or not smart contracts will actually happen. A lot of people questioning it. It seems like it's imminent. And Cardano got close to $3. It may have topped $3 on some exchanges, depending on where you're looking at it. Right now, my chart does not show that it's topped $3 yet, but it got really close at $2.96. I rode this Cardano play. That was one of the trades that I took recently. I'm waiting for a couple of more to develop as we go along, but I did participate in Cardano. I did not catch Solana. Solana was a big one, real big spike there. I didn't get a piece of that one. I just focused on Cardano. When the announcement was made that they were doing smart contracts and it was finally going to happen, I bought in and then I exited just recently. Bitcoin, I missed the bottom, but I did buy in on this trend reversal and then exited it out of that. So I'm no longer in any assets right now. I'm kind of waiting this out to see what the next move is and to see what the overall trend is. And we talk a lot about trend, right? Trend is your friend. And we were in this downtrend. And what you needed was, how do you know the trend has been reversed? And you had this trend line here. And really, until you cross this major trend line on your last high and your first lower high of the downtrend, until you crossed that trend line, there was no clear sign that trend reversal was in place. And when we touched that trend line and reversed, that was our first lower high coming off of that trend where we crossed that $40,000 level. We closed in at 42,000. So that was our first lower high of the trend reversal. And then we put in our first higher low of the trend reversal at 37.8. So there's really three things you need to look out for now moving forward. And one of them is, again, this trend line here has been crossed. So we've reversed the downtrend. Now we have a new trend line. This is the new major trend line for Bitcoin right now that continues to confirm the uptrend. As long as we are above this trend line, we are in good shape. Every time we touch it, we're putting in a higher low, which is very important. You always want your lows, the next low, to be higher than the last low. So as we watch Bitcoin price rise, and we're getting a little pullback today, but nothing to be concerned about. With a spike like we've had, you're going to get pullbacks. We know this is institutions pumping the price. The question is, can retail sustain these pumps? What are the institutions really up to? Are they really trying to drive the price up, or are they trying to sucker people in to dump? So that's the real question that we have to figure out. We all know that we're on the train with the institutions. So all we can do is kind of ride the train with them and try to figure out which direction they're going. That's why I'm sitting it out right now, because you've got a couple things going on. Number one, you're in classic bull trap territory. A lot of people are expecting the bull trap. And a lot of people have been calling for that. I've had people on my channel for 2 months now that have been saying anywhere from 52 to 54, you could still be in bull trap territory. Why? Because those are your major Fibonacci retracement levels. So what's a retracement level? So this whole downtrend, As you can see now, we've retraced this entire move now almost back to the 618. Depending on where you spot that retracement, top and bottom, the 618 is in that 50,000, 51,000 range, up to the next Fibonacci, the 7.8, up into that 55,000 range. So anywhere from 52 to 54,000 is still danger zone. We want a clear confirmation by closing above 50, 51 for now. And then ultimately, once you get past probably 54, actually this next level here, let me move this picture here. This next level here of our last, or the first lower high of the trend was 58,000. So past 58,000, you're pretty much clear. Again, you don't have clear trend reversal until you get past the last high, which was 63, 64,000. So the things to watch right now are this trend line right here. As long as we're above this trend line, we're doing well. Every time we touch it and bounce, that's just another higher low. And that's what we want. And we're continuing to put lower highs in again till you cross back over 64,000. Then you're off to the races, and you're going to have pullbacks along the way. As long as they don't break this trend line, the trend continues. So that's the major thing to watch. The other major level to watch is that 618 Fibonacci. You can research that on Bitcoin 618 Fibonacci. And again, depends on where you take that from, whether you take it from the market high to the first low, whether you take it from the second market high to the second low. There's a lot of ways you can measure that, but they all land in that 50 to 52,000 range. And then your next Fibonacci level at that 57,000. So that's a big range of uncertainty for Bitcoin. And that's not me, that's the charts. And that's just how it is. That's what all of the markets are looking at. Those are key technical levels. So for the algorithmic automated trading, those are key technical levels that all of the trading algorithms are set for to sell in those areas. So that's why you have a resistance. What is resistance? Selling. What is support? Buying. So right now, there's a lot of trades, a lot of algorithms that are set when it hits that 618 Fibonacci retracement, to go ahead and sell. And that's where we're at now. So when you look at this on the hourly, it gets really interesting because, again, when you talk about retracement, that's basically when we shrink this down and look at this whole area. That's basically what you're doing, is retracing your steps. And it's really interesting to look at patterns. We have this current little pattern going on here, and you can kind of look throughout these last moves where we've got this same kind of pattern here, almost this M pattern, where it comes up, makes an M, and then bounces. That's kind of what we're in right now. We've come up, we've made an M. So at some point, if we retrace this move all the way back down to potentially the 48,007 level, you could expect it to bounce from there. And again, as long as we don't break that trend line, we're in good shape. So keep an eye on that trend line, keep an eye on the Fibonacci levels, and you want to keep an eye on the higher, lower highs and higher lows. If we do break the trend line, so this is the next thing to look at. Where can you look for a trend reversal? So this uptrend right here, what's the third thing you need to look for is trend reversal. How do you know the trend's reversing? If you break this trend line and we come down and we close below this last lower high, then that's a red flag that you may have a trend reversal in place, because you're probably going to have a lower high, and then you're going to have a lower low at that point, making a new trend, and you know that you have trend reversal. So those are the things to watch for to know, is this trend going to continue? And if you do break the trend line, is it going to reverse? Those are your key indicators. That's how you know whether or not we're in a bull trap, whether or not we're in a bear trap. And we are in that go, no-go zone for Bitcoin right now. If we can close above 50,000, get above 52 and keep going, there's a good chance that this trend stays intact. You've got your main trend line here, as long as we don't get below that. And as long as we don't break this last lower, higher low right here, we are in good shape. So those are your key indicators to be looking out for. And what we need to be watching for Bitcoin here in the near future. The other thing is, as I always say, keep an eye on the markets, the traditional markets. Everything is hinged together now. The capital is flowing back and forth in and around traditional markets into cryptocurrencies. And as you saw last week with the talk of the Fed tapering there at Jackson Hole, They're having their meetings coming up, and they're going to talk about whether or not they're going to taper. Last week, they said they were going to start. Market sold off a little bit. Everything was kind of taking a dip. Then they came out over the weekend, late last week and over the weekend, and said, hey, the economy is not where we want it. The Delta variant is creating too much uncertainty. Maybe we're not going to taper right now. We're going to hold off. So markets rebounded. They're back up today. So a lot of uncertainty out there, a lot of action hinging on what the Fed does, not what they say, but what they actually do. But a lot of it on what they say as well, because they are testing markets and sending signals to take profit. So keep an eye on what the Fed is doing and saying. It will affect Bitcoin no matter what else is going on, no matter how good the fundamentals. If traditional markets start to sell off, if the Fed starts to taper, we're going to get a pullback. Not saying a crash. I'm just saying you're going to get a pullback. So just be aware. If you're long-term, doesn't matter. If you're trading, those are the things you need to watch out for. Those are your indicators. And those will give you your entrances and your exits.